Hello and welcome to Season 2 of Leaked Lunch, the Fly on the Wall podcast that brings you to the dining table with me, Izabella Kaminska. In this edition, I sat down with finance and banking expert Huw Van Steenis, Vice Chair at managing consultant firm Oliver Wyman at Brasseria in Notting Hill. Huw wears many hats, including that of co-chair of the World Economic Forum's Global Future Council on Financial Services. And in fact, he had just come back from this year's conference in Davos when we sat down for breakfast. But it's in his former role as a special advisor to then Bank of England Governor Mark Carney on the long-term future of the financial system that Huw really got stuck into the thorny topic of central bank digital currencies as well as digital financial transformation. Given mounting speculation that the UK is on the verge of launching a CBDC project of its own, I wanted to get Huw's thoughts on the viability of what they are calling Britcoin. I was surprised to learn he had actually advised the bank against going down that route. But we didn't just chat fintech, blockchain and financial inclusion. We also touched upon the global economic picture, the BRICS challenge against the dollar, the underperformance of ESG funds in 2022, and what can be done to improve global productivity. The bill for the breakfast came to £75.33. Now a quick shout out to the Peer for Peer Foundation for making this podcast possible. Enjoy the recording.
Well, Izabella, thanks for having me for breakfast. So my main gig is that I'm vice chair at Oliver Wyman.
Right.
But, I'm still an investment analyst at heart, and so the Norwegian Sovereign Wealth Fund have very kindly asked me to join their climate advisory board.
Right.
And I guess I spent more and more time, getting interested in the intersection between sort of finance and climate.
How do you find yourself doing financial tech? Like, how did you end up an expert in that area?
So after my first job after uni, I did one of these classics of 2-year gravy tours around at Credit Suisse First Boston. We had to do 6 months in every tour, and I went to work in New York doing bonds for Caribbean countries and non-US issuers to the US. So at which point CSFB was a great house. And one of the person I was working for just said, look, you need to be an expert in something,
right? And
because that's the way you'll tunnel through it more quickly. The governor very kindly asked me in his final year to come and help work on a report about future finance and what the implications were for the bank.
Right.
And in a way, the genesis was that Brexit, if I'm allowed to use them, I mentioned the word once this morning.
At breakfast.
Brexit
at breakfast.
Had meant that all the senior talents of the bank had to focus on that as the urgent and important problem of the day. And a lot of the desire to think about the future agenda, whether it be the climate work that Mark has championed, or it's or fintech work, got derailed. And so I had a brief to sort of look at that area. And I'm afraid I didn't. That was 2018, 2019. So in the end, I'm afraid I didn't recommend a CBDC, but that's partly because the bank itself was updating its core banking system, which was the largest IT project in the history of the Bank of England, even inflation adjusted. So they were busy. But two, just trying to think, are there other ways? If the objective is to have cheaper cross-border payments or more inclusive financial system, is this really the best way to do it? So we tried to go back to basics about what you could achieve by what tools. The problem with the CBDCs is that, so you asked the question about why did they get all so panicked? Why 91 banks looking at it? I think it's because the threat at first was a more disintermediated system and one in which the big techs had more power. And I think the peak was the
Libra?
peak. Libra, tipped the balance.
Yeah.
And if you spent time with them, you realise that they hadn't really thought it through, but they had enough money. You thought they might get good people to think it through. And obviously, in the end, that for a variety of reasons, they got they didn't nail it for all sorts of good reasons. I mean, but obviously that threat of Libra was the total stack of identification, payment rails, and so forth. I think that's what the threat was. And of course, as Libra imploded, it's almost been more surprising that they held a torch for CBDCs.
I mean, thank you.
Fewer platforms, the more the scale matters. And I think when we come back to, one of the conundrums is why are European banks worth so much less than US banks?
Yes.
And if you do it as of last week, pre-financial crisis, European banks' market cap compared to US was 170%.
Yes.
Today, European banks to US banks is 55%. So dramatic implosion. And obviously we've had shittier growth, we were slower to recover from the crisis. But some of this is actually, our banks are at smaller scale. And actually, if you think about engaging and thinking about standards, and also being realistic about what energy security needs, we're not going to achieve anything. And so I've also continue to do a lot of work with GFANs and so forth, and like any new initiative, it gets some things right, some things wrong. But if you think about the underlying economics, is at the moment there's roughly speaking $1 of capex on green renewables to $1 of capex on existing fossil fuels or maintenance capex. The aspiration is that might go to 4-1 by 2030, but that needs to come as much from incentives to invest in green as it is from trying to turn things off. And that's why, in a way, I think you and I are quite intrigued by, does the Inflation Reduction Act, does EU retaliate with green subsidies and so forth?
Yeah, so because this was the message from Davos again, that like subsidy wars, if they're green, they're okay. Like green subsidy wars are fine.
You want to make smart bets and get the right data to help improve your odds. And I think that the focus on, decarbonisation in the economy, understanding the different pathways, is helping finance making slightly smarter bets. Of course they're going to get tons wrong, because that's the history of the world, but it's at the margin, it's helping.
Did you get to meet Greta at Davos?
I didn't, no. We need to think about what's the investment problem, what's the risk reward, what are the factors, and understand and to dissect it. And understanding decarbonisation pathway, given, let's say, the IRA, given these huge shifts in public policy, being a bit savvier about that's no bad thing, which is different, I think, from maybe slightly more the naive being beholden to the activists, which I think was clearly happening. It has been happening.
I think it's certainly,
I'm probably, Dalton's thesis has got quite a few different aspects to it. I'm afraid I'm on the whole, I'm probably still more in the camp of that the dollar remains pretty much dominant. Now, let's unpick this, because it's a big question. Let's say, so one question which is in there is, what happens to central bank reserves?
Right.
The vast majority of central bank reserves of sovereign wealth funds are still anchored to dollars. And so if at the margin a couple of points went away from dollars to renminbi or euros or what have you, it's not a big deal at the moment. Right. Obviously, you could argue if China stopped buying US debt, that's a major issue. But obviously the recycling of petrodollars, particularly in the Middle East at the moment with the high energy prices, if you look at what's happening, they're still very largely going back into dollar-based assets. And I think part of this was going to be a macro question. What's the performance of Europe versus the US? How will emerging markets do? For the moment, the US remains pretty robust, and hence why it was on that sort of wrecking tour last year. But I don't see a profound switch yet, a large enough switch from reserve managers to make a big difference this yet. I mean, maybe over the course, it might take decades, but I don't think it's a big enough deal. Well, it's also quite tragic they didn't learn too, and I'm afraid if you go onto this, the stablecoin sector is still having to learn a lot of lessons, and the stablecoins are not yet there. I mean, there's still plenty of lessons. But the third bit is, look, I actually think if you argue the major central banks, particularly the US regulators, try to dissuade the major banks from letting crypto into the major banks, and on that they succeeded. What's going on at the moment with Silvergate and some of the other smaller West Coast banks is leaving a very bad stain on crypto, an unregulated crypto system inside the bank. And I think that, in a way, I wonder if Silvergate has a bigger impact than FTX in the longer term of the way that the regulators think.
Because they were a regulated bank, right? So Jamie Dimon might still be proven right. I think he reiterated his Bitcoin is overhyped up rubbish, but blockchain's quite interesting this year. But yeah, that's interesting. So you think they will be forced to act to stop the banks getting even more crypto curious than some of them already been?
I think it will lead to a really big pause.
That was Leaked Lunch with Izabella Kaminska. For more on what happens when finance and media intersect with reality, check out The Blind Spot at the-blindspot.com.